The Zacks Rank, value, momentum, growth, and income all factor into Zacks Rank buys.
What do a heavy machinery maker and a specialty retailer have in common? Well, they're both on Tracey Ryniec's value radar this time around. She's here now to talk more about them. So the heavy machinery maker is Oshkosh Corporation, not to be confused with the clothing manufacturer.
That's right.
Right? The by gosh people.
I know. I do get it confused still in my mind. I mean, even though Oshkosh, the heavy machinery guys, have been around forever, they're Wisconsin-based.
Yeah.
And they have a lot of different categories, but I still think of the clothing line.
Yeah.
I don't know what that is.
That's branding for you.
Yes, very strong branding.
Yeah.
But you know, machinery, it's been a tough go of it, mainly because of what's happening in China and then, you know, the slowdown and recession in Brazil. There's a recession now in Canada. Australia's not doing too well. So you have problems in some big economies that's going to impact sales. Now, Oshkosh makes a whole bunch of different type of machinery. They have this access equipment, which I always think of as basically what the name says, access. So they make like scissor lifts and things where you have to get in, access things.
Sure.
But that is heavily dependent a lot on construction, and so that's getting hurt right now. Then they also have like fire equipment. They make fire trucks. That's, you know, probably pretty steady business, so that's okay right now. They also have commercial, which in the U.S. is doing pretty well. That's like concrete mixers, but I mean, China was buying concrete mixers like out the wazoo, and now they're not. So that is getting damaged. So part of this is, you know, you can see where the value might come in here and why investors aren't too thrilled with this company right now. But they have a defense segment, and they were just recently awarded this huge contract by the Department of Defense for
a little snafu there.
Well, it's for Humvees, and there were 3 defense contractors in the running for it. They got awarded the contract, but under the rules, you have 100. You can protest, and then within 100 days, they rule on the protest. Now, only one of the other 2 have actually filed the formal protests, and that's Lockheed Martin. So they are protesting it because this is a $30 billion contract. It would be about $9 billion through 2020, and they would supply about 17,000 Humvees during that time, and maybe as many as 55,000 Humvees through 2040 for the Marines and the Army. So this is a big deal. So we'll see, you know, if this contract holds, but all the analysts expect it to be accretive almost immediately starting next year, but the bigger gains will be in the next several years. Now, what this will do will even out all the ups and downs they've seen in their other segments. So if China's in a recession, you know, they have this contract and they have some other stable business going on in their defense area. So analysts like this aspect of the story for now. We'll see what happens.
Right.
But you can see in the estimates for this year, we're seeing a decline of about 13% year over year. It is bouncing back for next year. So that's why, you know, investors have been kind of turned off for the last several months with this stock, because who wants declining earnings? Nobody.
Right.
But you can see in the chart, it's really sold off since June, and this is when the fears about China and what is happening globally have really started to hit these kinds of stocks. We've seen a little bounce off the low here. It's trading around 11 times. That's pretty cheap. It pays a dividend, which has always been kind of on the low end, but now that the stock is sold off, it's almost 2%. Yeah. So right now, you know, there's some better story going on with this equipment maker, so it's not a bad one to maybe keep an eye on.
All right. And then the specialty retailer is Cabela's. Now, you've always talked about Cabela's.
Right.
Since I've known you.
Yeah, because I like that they have restaurants in a lot of their stores, and they serve like boar burgers and interesting things like that. So it's unique. Like who gets boar burgers? Not many people. Yeah. But they are really well known for like their specialty outdoor products, camping. They're big in hunting. When gun sales were really soaring the last couple of years, that's when their sales really took off. But in the last year or so, gun sales have come way back down. It has really hurt their sales. They've also been mixing it up with the type of stores they operate, because they operate those really huge ones with the restaurants and like the fudge shop and all that kind of stuff, which is cool. But they've been opening up slightly smaller stores and seeing a real big gains in what's come out of that. And they're also focusing a lot on their catalog. So a lot of parts moving here, but the hunting season is upon us now, and it looks like this is going to be a good hunting season. They can kind of tell from the background checks for
guns?
Yeah, for guns,
Really?
like where possible sales might be coming from. So
That's
it doesn't,
interesting.
yeah, it doesn't necessarily mean you're going to buy the gun just because you get the background check, but
Yeah.
it is a fairly good indicator. And in July and August were some of the highest July and August we've seen in recent years. So it looks like that might be improving. So when that improves, along with its other good product mix, then the analysts get a little more bullish on Cabela's. I put up the estimates here. Nobody's raising the estimates yet, but they have stabilized because, again, in the last year and a half, they've had a little bit of trouble with, same-store sales and things like that as the gun sales really dropped off. Mm-hmm. And then you can really see it in the chart, 2-year chart I put up here, and it's just been sinking. So, shares are fairly attractive now at about 14 times. So it is a value stock. Doesn't mean it couldn't go lower based on what they're going to do this quarter. And then we'll see the big holiday season because obviously as a retailer, that is one of their big seasons.
Well, they report by the end of October, right?
Right.
Earnings?
Yes.
And did I read correctly that their earnings are forecast to be up considerably next year?
Yes. I mean, they're supposed to see about 7% earnings growth this year and then doubling to about 14% next year. So it looks like maybe they're putting this little period of slower sales and little hiccups behind them, and then they'll move forward. I mean, Cabela's does have this strong brand. People love their huge stores. They're in like good, camping rural areas in both the U.S. and Canada. So, but it's a very special niche that they've been able to fill. And we'll see how that market plays out.
Yeah. Do you own either one?
I do own Cabela's.
Okay. Well, thanks for disclosing, as they say. And if you want to take a gander over at Zacks.com, you'll find more articles there on stocks, stock picks, stock strategies, written by Tracey and our other strategists as well. You can link to those right off the homepage. A reminder also, if you're watching our videos on YouTube, you can always subscribe to them there and even comment on them. We welcome the feedback. With Tracey, I'm Terry Ruffalo.